Hello traders, this is General Romulus coming to you live from the Forum in ancient Rome. Before we kick off, let me remind everybody that I am just an old Roman general. I am not your financial advisor, stockbroker, dispensing any kind of advice to you whatsoever. This is strictly for informational and educational purposes only. Now that we have some kind of a framework for peace. That's right. Last night, the Pakistani government helped arrange some kind of a temporary negotiated peace, 2-week ceasefire between the United States and Iran. Oil prices are plummeting, down almost 20%. Stock futures are flying up significantly. One of the larger up days that we have seen for some time, actually, especially after the war got started 5 or 6 weeks ago. And if we look at the futures market, because we'll get a little bit of a better look as to what is going on right now, eclipsing 200-day, 50-day, right at the upper edge of this box that we drew in some time ago. Last week, check the video, we discussed in some detail why everything you think you know about the rally that began last week is wrong. Let's dig into that more today. Okay, we've got a picture of the S&P 500 using the exchange traded fund SPY in front of us right now and trading same place it was back in the beginning of October. This is right now after the huge bump from the overnight news with the temporary ceasefire. And you could see stocks peaked out, topped out. You can look at NASDAQ over here as well, right near the end of October. October usually kind of a rough month for stocks, but it wasn't this past October. Things went up, but that's when the stock market peaked. And then it went into a long period of choppy, consolidative activity before breaking below support and dipping into multi-month lows after the announcement of the beginning of this war at the end of February. Here's why that is important to understand in more detail. And it'll demonstrate why everything you think you know about the current rally is wrong. Because back here at the end of October, the United States was still moving military assets into the Caribbean in anticipation of the seizure of the Venezuelan leader, Nicolas Maduro. There was no discussion at the time about something going on over in the Middle East. All of our military assets, aircraft carriers and all kinds of power shifting into the Caribbean for the takeover of Maduro, okay? But the market peaked here at the end of October. I thought it was the war. Well, there was no discussion about the war back here. If you look at oil prices back at the end of October, right about the same time, you can see, they're trading down here below $60 a barrel. And they doubled in just until yesterday even. They doubled up on that. So obviously it wasn't the war. What was it? Well, we can get into the speculation about that in a moment. But right now it's not as important as what the cause of it was or is, as it is more important to discuss what's coming next. But before we get to what's next, we have to understand a little bit about what really is going on. And that's why you come here. That's why you hang out with old Roman General Romulus, because, you don't get this kind of information or detail anywhere else on this great planet of ours. So again, the market started funking out, as I call it, long before we were moving military assets over to the Middle East and the attack began against Iran. Long before that. So that wasn't the reason. If that's not the reason why the market went into a funk, then doesn't it stand to reason that the ending of this war will not pull the market out of its funk? Whoa! General Romulus, what did you just say? Please repeat that. Okay, I will. The war with Iran is not what put this market into a funk. And it will not be the ending of the war with Iran to take it out of its funk. Okay, I said I would talk about why the market went into this choppy period, turning into the correction when the war started. A couple speculative points. Number one, the U.S. jobs market has been flat. It has been really weak, considering other strong economic indicators out there. Stock market at new all-time highs right here at the end of October. We saw tax cuts approved and they were on the way. Oil's under $60 a barrel, very anti-inflationary. And by the way, the chart of oil up until the breakout here looked like it was heading much lower. You can see the downtrend in place. And I would speculate that without the war, we would have seen $45 barrel oil by the end of the summer. And yet that's not what happened, okay? So markets start going into this funk, this choppy period. I believe it has something to do with the job market, maybe AI type of job reductions. Another factor in place that struck me somewhat recently is the tariff situation from a year ago definitely calmed down a bit, definitely changed from the worst case scenario that some were expecting and got somewhat improved. But the tariff situation in the global marketplace, especially people doing business with America, importing, exporting with the United States, is radically different than it was a year and a half ago. And it's not going to change anytime soon. It's not going to become the way it was before. Countries, Western Europe, Asian countries, let's take even the Gulf countries, heavy investors in the United States for the last several decades, especially you consider how well our technology landscape is done. We have the best companies in the world out there, most valuable companies in the world. You're looking at NVIDIA, Apple, Microsoft, Google. There's no one else in the world, not even close, that can post this type of wealth-creating stock market engine that the United States has. And so many people from around the world, whether it's sovereign wealth funds, big money institutions, individuals, have been big investors, net investors in United States stocks for a very, very long time. The tariff situation changes that. It changes that situation. They have to deal with other economic realities like, paying for their own defense, like trying to adjust to the fact that they can't rip off America anymore with the tariff situation. They have to come up with more money. And so there has been, I believe, some downward pressure on stocks that has primarily been driven by overseas investors coming out of the United States market and doing other things with their money. So you combine that with the weak job market, and again, perhaps the weak job market can be attributed to the AI improvements and revolution that we're undergoing right now. Companies don't need the body counts that they thought they would have just a few years ago. And so we have a factor where that put a lid on stocks. You can see the lid. Well, we drew it in a long time ago, the lid right here. Then the war starts and it goes into this corrective path. Now, you look at what's going on this morning, building on the rally that we talked about last week, coming up above the 200-day, a little above the 50-day, right into this corrective choppy area that it had been in since the end of October. So now that you know the real reason why the stock market went into a funk, well, we believe we know, but it did nonetheless, why coming out of this war will probably not end it. There are still lids, there are still roofs, there are still areas of heavy resistance that the market faces, well, right about here, right about these price levels. And it's going to be somewhat difficult for the stock market to overcome these areas just because the war ended. Because again, the war beginning is not what put the market into this downward spin to begin with. Now you know something that no one else knows. Now you understand something about the market that no one you know, whether you're a financial advisor or the top equity strategist over at Goldman Sachs, Morgan Stanley, doesn't matter. You know something that they don't know. And you are empowered, I believe, because of that. Okay, so what's next? Well, again, we put the S&P 500 up here, and we see all this overhead resistance that it's heading into right now. It's not just going to fly through that, more likely than not, okay? That's one. Oil prices. Well, contrary to what some believe, some people believe, the war's going to end and then oil will go right back to 60 a barrel and even lower, and gas around the United States will head back to $2 a gallon or $2.20 a gallon. Lowest I paid was $2.47. That was back in the fall. So under $2.50 a gallon anytime really soon, not going to happen either. Oil is now in a different environment. Yes, it's coming down today, maybe tomorrow, maybe for several more days. But it will have a lot of difficulty piercing the $75 level with any type of strength and power. Why? Because countries out there in the world that depend on oil, China, most of Asia, Japan, they get a large percentage of their oil and energy needs satisfied from these Gulf countries. Infrastructure there has been damaged. It will take a long time to get it fully operational again. In addition, these countries are not going to just sit there and say, well, we hope oil goes to $50 a barrel and then we can just, cruise. As it goes lower, they will start to build up their strategic petroleum reserves again. And they're not going to wait till $50 a barrel. They'll wait probably not any time. They'll probably start doing it now. So there's going to be a demand floor underneath oil. I don't mean demand from the people using it to fill their cars. I'm talking about countries buying more to shore up their oil reserves because they are nervous about the future of their own energy needs for quite some time. So that will put a floor under oil. That means inflation will stay elevated to some degree. It's going to be pulled back a little bit here. You see interest rates pulling back, but inflation will stay somewhat elevated for longer than what a lot of experts are telling us or want us to believe. And that also spells difficulty for the stock market over coming weeks and perhaps months. This is not permanent. This is not forever. Everything I'm talking about here has some type of an end game to it. But over the short and intermediate term, so the next couple of weeks, next couple of months, this is the positions and situations that as traders and investors, we will be facing. Okay, a couple of weeks ago, I was talking briefly about the legal landscape, the challenging legal landscape behind social media companies such as Meta and Google. They're losing lawsuits. Google and Meta both lost a lawsuit in California. Meta lost a major one in the state of New Mexico. Snap was settling out of these. I mentioned that Google is the strongest company of the three to weather the situation. Meta will be damaged by this, however, survived. And I still speculate that Snap will be bankrupt. Snap was saved temporarily here. There's some involved irritable investor that's getting stock shares bought up and trying to encourage Snap to rely more on AI and suggesting that the stock can go up a lot from productivity and other enhancements from that. However, they will not be able to survive the onslaught of the lawsuits coming over the next 2 to 3 years. And I repeat what I said before, that in 2 or 3 years from now, Snap will be bankrupt. And if you're looking for something to do, work-wise, old General Romulus has got an idea. Over the next 2 years, there is going to be a frantic pace of activity to generate all kinds of transportation abilities out of these areas that prior were shipping oil and fertilizer through the Strait of Hormuz, and they're going to try to get it out of Oman instead. Oman already has some ports with some pipelines. That stuff will 10x over the next couple of years. Highways built to transport fertilizer, trucking companies, pipeline manufacturers, all of that. There is going to be an absolute gold mine rush of activity in Oman, developing. You help develop ports. You're a welder. Move to Oman. You'll make $500,000 a year or more over the next couple of years because of this. This shipping route out of Oman into the Arabian Sea and into the rest of the world just cuts that Strait of Hormuz dead, makes it dead, not necessary. Okay? So that will be happening over the next couple of years. Just a little career advice for any of you folks that might need it. Okay, this is General Romulus again. Happy to be here. If you want to reach me directly, email is always good, romulusteaches@yahoo.com. Again, romulusteaches@yahoo.com. I am about to go witness something absolutely spectacular. We have prisoners being fed to lions. You thought you guys had tough stomachs? Ain't seen nothing until you've seen somebody being eaten alive by a lion. Okay, that's all for now. Remember, consistent returns, regardless of market direction, that's what you should always be seeking. Talk to you soon.